All right, guys, another wild and crazy trading session today. In the last 20 years of technical analysis, I cannot recall, outside of 2008 when the market crashed into a recession, I can't recall any sequence of trading where we have seen the last 6 days of 1,000-point moves. Okay, that's legitimately 1,000 to 2,000 ticks every single day for both you Forex and futures traders. All right, I want to show you something really interesting today. Okay, here's the bullcrap chart. Okay, and then here's the same chart with my dyno filter on top of it. And check this out. So today the Fed announced a surprise rate cut almost exactly at 9 o'clock a.m. The market skyrocketed, right? And then check this out over here. Dyno bar short signal almost at 10:30 on the dot. And what I want to show you here is something that I think you guys are going to find very interesting. All right. What I have noticed on the dyno charts, especially in the market environment that we're in now, okay, is that the retracements are sizable and the retracements are very valid. So when you guys are looking for these retracements, here is an awesome suggestion. All right. What you could do, all right, is you could do what you always do, which is break up the dyno bar, the dyno signal bar, into the high and the low, right? Nothing new there. And what you could additionally do to filter out, okay, for only the best setups and the strongest potential trades is break up the bar into quadrants or into thirds, okay? What I've noticed is that usually and typically, more often than not, the market retraces about 30%, okay, which is about a third. Now, you don't have to stick to that rule. It's not a hard and fast rule. This is just my observation, okay? So if we break up this bar into approximate quadrants, there's the 30% retracement line right there, okay? And in fact, I'm just going to go ahead and color this line just like this so you can clearly see the 30% retracement level. Okay, so now what do? Now let's quickly jump over to the T-bar chart, right? The smaller chart, the micro chart, and these three lines here represent these three lines from the dyno. Is that making sense, guys? I hope it is. All right. This red horizontal stripe here is the 30%. And all I've done is I've copied and pasted these lines here into the T-bar chart. And let me show you what I'm talking about in terms of why it makes sense to only wait for a 30% retracement. Well, number one, I hope that it's somewhat obvious, right? Let me squish this in here. You're essentially being very strict and very selective on your entries, right? Not that I'm saying there's anything wrong with waiting for any pullback, okay, into the zone. Like you could wait for it to go here, retrace here, retrace here, retrace here. You want to wait for a 70% retracement up here. That's fine too. All I'm saying is I have noticed 30% gets met very frequently in violent markets. So you go back to the T-bar chart and you decide to be very strict, right? Very selective with your entries. You're basically waiting for price to close above this line, right? And you can see that it kind of danced around in the zone, and maybe it only came up to here and then sold off, and you missed it, right? And that's fine. That's part of trading. But like I said, more often than not, it's going to touch the 30% retracement zone, right? So if I zoom in here, let's really zoom in here now that it's touched the retracement 30%, okay? Here is an area where now you start looking for shorts, right? So you capture the pivot points just like this, you draw your trend line like this, and you take that trade, man. You take that trade right there, place your stop here. What happens? You get to break even, hopefully, and you get stopped right out. Again, that's life, right? Getting stopped out is part of the game. Now, nothing's changed with the direction. We are still looking for shorts. The dyno bars is still red. We are still hitting our 30% retracement level. So we got to condition ourselves to keep looking for shorts. How do you do that? You do what you just did 2 seconds ago. Draw those pivot points, draw those trend lines. Again, man, you got to take that trade. You got to place your stop right there, right? And if I squish this in, let's just fit this chart here, right? Look at how this thing played out. I mean, I'm going to hit the F button here to fit the chart here, just like this, okay? Look at that thing, man. 500 NASDAQ points. That's 2,000 ticks. If we do the math on that, okay, that's 2,000 ticks times $5 a tick. Guys, that's $10,000 potential, okay? One contract. I'm only running this math on just one contract. You can imagine the potential trading 2 contracts or 4 contracts or whatever number of contracts you trade, right? So anyway, what's the takeaway here? Okay, the takeaway is if you want to be selective on your entries and you want to filter out for only the best setups, then do your back testing, run your technical analysis, and you figure out what you think is a good retracement percentage, right? The guys that are trading this bull crap right here, they'll never figure it out. They got their heads cut off today, right? But on these professional charts, what I call my dyno charts, it does a really good job of figuring out the direction, but you still have to be comfortable with the retracement. I like 30%, you may like 50, you may like 90, it's completely discretionary. All I'm saying is, I think that if you implemented this approach, man, sky's the limit. Okay, you can see that today. Sky is the limit. All right, guys, thanks for watching this video. Hope you killed it today. See you on the next trade.